Good morning, everyone. Overnight grain prices slightly lower last night. Right here at the moment, we're down 1 3/4 corn, 537 and a half. We're down 7 in the beans, 1238 and a half. Our main influence in overnight trade and yesterday's day session trade has been palm oil. That market continues to move to new contract highs and new year-long highs. That was except for last night where palm oil made new contract highs, but by the close was down 103 points. So seeing palm oil 103 points lower is the number one likely reason why we're seeing beans and bean products lower here in overnight trade. We also saw spillover influence. We've been seeing spillover influence from French wheat on US wheat. That also had a very small pullback. So we see wheat down 2 here in overnight trade. So we will keep watching the palm oil. It is still the number one guide for beans here these last 4 or 5 days on this impressive recovery from the report lows. We will point out, please look at page 2 of the morning email to put beans in the proper perspective of exactly where they are in the bigger picture. There's no way we can word what the beans look like better than just simply looking at the chart. So if you've got this morning's email on page 2, I put the November bean chart. You see the down channel. You see that we're right in the middle of that down channel. And like I said, just look at that picture and you get a much larger 4, 5, 6 month overview of the beans to show truly where they are, rather than just looking at the 5-day recovery, which is impressive, but it does pay very much to be looking at where beans are on the longer picture scheme of things here. So the morning email has the bean chart, the palm oil chart. It also has the French milling wheat chart for wheat influence, and lastly the December 22 crude that we've been trading here, just to update where that's at as well. So today is exports. We are expecting strong exports, especially for the beans. 1,500 to 2,500 are the expectations. Those are high expectations, but that comes from that recent 3-day 8 a.m. sales streak we got from China. So we know to expect weekly exports to be strong. Ethanol yesterday was very strong for corn, beating USDA expectations for the first time in months. So that's some solid news there. We'll keep tracking that. We'll see how exports turn out for all 3 grain markets here and see how that influences our day session. Flipping over to cattle, there were some late 126 Nebraska bids. That is quite impressive. That would imply a $2 higher cash trade for that area. Earlier in the day, we did hear a small 124 cash trade in Kansas. So again, that is steady with the previous week, but that will limit futures upside until we can see a further improved trade. To put things into perspective, futures at this moment are pricing in a 125 Kansas-Texas trade. We do feel a 125 is possible, but we have yet to actually see one. So we will keep eyes and ears peeled in the cash markets to see if we do get the 125 trade, and then expect the futures to react accordingly. But it is again important to point out that that is what futures are pre-pricing in as of the close yesterday. They are clearly looking for a 125 Kansas-Texas trade. As always, if anyone has any questions about the bean chart or cattle or anything else, feel free to call in whenever you have time. Thank you.